We're focusing today on a crucial turning point in the Tesla story, a strategic improvement that's igniting the financial markets. We'll examine why Tesla, the industry leader in electric cars, is changing its recommendation from sell to hold in this in-depth video. Is this simply a hiccup in the road, or is the Tesla track about to take a significant turn? Come along with us as we negotiate the complex lanes of market predictions, Tesla's audacious tactics, and the ever-changing auto industry. We're breaking into every detail of Tesla's performance, including the Model 3 and Y upgrades, as well as the risk-taking stock and share dance. Of course, a story on Tesla wouldn't be complete without a mention of Elon Musk's bold actions. As Tesla speeds towards a future that looks to be anything but typical, we're taking a closer look at Musk's grand scheme. Please remember to activate the like and subscribe buttons before we begin. Greetings and welcome to Tesla Stock News. Let's get started. According to our most recent study, Tesla Incorporated is experiencing an exciting upgrading from a sell to a hold. Here's some interesting news for all of you aficionados who have been following the auto business intently, especially in the second half of 2023. With the expected improvements in its Model 3 and Y, Tesla is expected to surpass its competitors in Q4 2023 and the first half of 2024. This change in outlook is a big deal, especially in light of earlier worries about Tesla's pricing strategy in the face of rising interest rates and declining demand. Here's a brighter future for lovers of Tesla. The company is expected to maintain its profit margins in 2024, thanks to cost-cutting initiatives that will be implemented the following year. Let's go on to the much-anticipated Tesla Q3 2023 earnings, which are scheduled for October 18. We go further into the complex web of variables affecting this crucial time for Tesla. More than just a collection of figures, the next earnings report represents Tesla's tenacity and astute decision-making during a time of difficulties and upheavals. It is hoped that these findings would provide a clear indication of the effects of the recent factory closures and Tesla's deliberate price cuts. The changing risk-reward picture for Tesla's stock as we go towards the end of 2023 and the first few months of 2024 is what makes this point more fascinating. A predicted decline in Q3 output was revealed by Tesla's management during the Q2 2023 earnings call. This was ascribed to several summer shutdowns that were necessary to carry out a number of plant improvements. These improvements are more than just standard maintenance. They're essential for raising production capability and effectiveness and setting the stage for further developments in Tesla's manufacturing capabilities. It is important to consider Tesla's journey in its totality. Even with this little lull, the company is still on course to meet its aggressive goal of delivering 1.8 million vehicles this year. Even if this goal is difficult, it demonstrates Tesla's dedication to increasing manufacturing and satisfying the growing demand for electric cars. In this backdrop, the company's recent production and delivery results demonstrate admirable agility in negotiating challenging challenges, although somewhat falling short of Wall Street's projections. The 7% quarter-over-quarter decline in deliveries, or 43,559 vehicles, should be seen in the context of operational challenges and pressures on the world economy. Compare this to Tesla's performance from the prior quarter, when it delivered 461,140 vehicles, exceeding forecasts as well. Tesla proved last quarter that it could outperform market estimates, which were for 445,000 vehicles. This achievement was a strong endorsement of Tesla's commercial viability and operational effectiveness, despite an uncertain environment. It's clear that Tesla isn't merely coasting. Rather, it's strategically growing in a sector that is continuously changing. Their approach isn't just a response, rather, it's evidence of Tesla's steadfast dedication to quality and innovation. Keep checking back as we track Tesla's journey, which promises to both revolutionize the automotive environment and solidify Tesla's standing as an industry pioneer. There's a buzz about Elon Musk's expected move as we dig deeper into Tesla's approach. It is anticipated that he will intensify his aggressive pricing plan throughout the second half of the year. For all of you Tesla enthusiasts, though, this is where things start to get interesting. Profit margin concerns are waning. You might wonder, why? Tesla's cost-cutting efforts are accelerating the transition to a more optimistic 2024. Let's now discuss Tesla's most recent innovation, the improvements made to the enduringly well-liked Models 3 and why the production has temporarily slowed down due to these enhancements. Tesla's delivery numbers are expected to soar in the last quarter of FY23. Imagine the scene when Tesla continues to dominate the electric vehicle market, surpassing rivals like Ford and BYD. It's not enough to just stay in the race, you need to lead it with style and innovation. But there's still more. The high interest rate environment and China's slower recovery pace appear to be causing some instability in the automotive business as a whole. With its latest car upgrade, Tesla, however, seems to be on a different path. In addition to being ready to take on these difficulties head-on, Tesla is predicted to do better in Q4 2023 and the first half of 2024 than the overall car industry. Gazing at Tesla's financial situation is similar to gazing at a powerful sports car. Svelte, attractive, but undoubtedly more expensive. Even while Tesla stock is still expensive, there is a trend that investors should be aware of as we approach 2024. A move towards a more balanced risk-reward situation. But for those of you considering investing in Tesla's shares at this time, it could feel a little like catching a shooting star. Alluring but just out of reach. So let's do some maths to get a better idea. Tesla's stock is trading at an astounding 74.9 times its projected $3.36 earnings per share for 2023 on a price-to-earnings (PE) basis. This is much more than the 24.2 times average for its contemporaries. To put things in perspective, comparatively speaking, Tesla is outpacing the peer group average of 3.6 times when it comes to price-to-sales ratio, cruising at 7.8 times its projected 2023 sales. What does all of this mean for you as the astute investor who is observing this? It might be best to stay out of the way for the time being. It's similar like holding off on getting behind the wheel of a Tesla until you're convinced it's the proper time for you. As Tesla continues its meteoric rise in the market, we advise you to keep your eyes on the road, or in this case, the stock. Watch this space for updates on when it would be appropriate to fulfill your dream of owning Tesla stock. When one ventures into the busy streets of Wall Street, one is struck by the cautious, negative attitude that surrounds Tesla stock. Imagine this. Among the 45 experts who are closely monitoring every move in Tesla stock, 18 are giving it a resounding buy rating and a thumbs up. 20, meanwhile, are taking a more cautious approach and keeping their cards close together with a hold rating. The remaining analysts are recommending a sell while raising a red flag. Let's speak about numbers now, since they always tell a fascinating narrative. At $252 a share, Tesla's stock is presently trading, which provides a nuanced picture of investor emotion and market expectations. Looking closer, the median sell-side price objective is $265, indicating a modest potential increase of 5%. The mean price prediction of $237, however, thickens the plot and suggests a possible downside of almost 6%. This depicts a stock that is at a crossroads, with different market gurus projecting alternative trajectories for it. You, the audience, find that following Tesla's stock is like to viewing a thrilling, action-packed film. The story becomes even more captivating as a result of the fresh layers that each analyst's viewpoint offers. Though we continue to be cautious about the car industry overall, particularly in the second half of 2023 due to expected market corrections, Tesla appears to be following a distinct path under Elon Musk's innovative leadership. Looking ahead, especially to Q4 2023 and the first half of 2024, Tesla looks like it will surpass its competitors in the business. It's like a sturdy ship that sails through choppy waters better than others. What is the cause of this optimism? Elon Musk, the company's CEO, deserves a lot of the credit for his calculated actions. His method is comparable to that of a grandmaster in a game of chess, where every move is a calculated element of a bigger plan. This is especially true when it comes to pricing. Musk made a move that goes beyond simple competitive pricing when he decided to apply a price reduction plan. It's a strategic tactic similar to a chess player giving up a piece for a better position on the board. This tactic might accomplish several goals, including increasing the market appeal of Tesla automobiles, posing a threat to rivals, and possibly even accelerating the growth of the electric vehicle industry overall. Take into account the larger environment in which these price reductions are being carried out to fully understand the depth of this strategy. Pricing is a significant aspect in the electric car business that can affect the rate of consumer adoption. Tesla's price reductions not only make its cars more affordable for a larger range of consumers, but they also establish a precedent in the market that may encourage EV adoption and daily integration. Musk's approach also appears to be a reaction to the state of the economy at the moment. Customers become more price sensitive during uncertain economic times. Tesla's price reductions may be interpreted as a calculated reaction to this sensitivity, preserving the brand's attractiveness and accessibility for customers who may be rearranging their budgetary priorities. This action affects Tesla's competitors as well. Tesla may be able to force other manufacturers to cut their pricing as well, creating a more competitive market. This is comparable to a chess player forcing their opponent into a defensive move in order to obtain the upper hand. Take into account the effect on Tesla's market share as well. Reduced costs may result in higher sales volumes, which may help Tesla hold on to or perhaps expand its market share in the cutthroat EV industry. This reminds me of a chess player taking up more space on the board and setting himself up for more strategic wins. It's understandable that you would be concerned about the profit margins at this point. The surprise in the tale, though, is that Tesla's aggressive cost-cutting plan, which is scheduled for 2024, appears likely to offset the predicted decline in margin. Consider Tesla to be a sophisticated device that is continuously optimizing its workings to increase productivity and efficiency. For you, our readers, this downgrade to a hold represents a turning point in Tesla's journey, a harmony between prudence and hope. We'll keep you updated as we continue to track Tesla's progress, providing you with insights and analysis to help you make sense of these fascinating times for the automotive industry. We've been through the highs and lows of Tesla's journey thus far, concentrating on Elon Musk's calculated actions and how they might affect the firm going forward. Tesla is a firm that is always changing and adapting, as seen by its aggressive pricing plans, ability to withstand setbacks in the automotive industry, and high expectations for its Q3 earnings. What do you think of Tesla's present approach? Do you think Tesla's market position will be strengthened by the price reductions and model upgrades? In the fiercely competitive world of electric automobiles, how do you see Tesla adjusting to the opportunities and difficulties that lie ahead? Kindly leave your remarks in the space provided below. Please remember to hit the like button and subscribe to Tesla Stock News if you thought this research to be informative. We appreciate your time and hope to see you in our upcoming videos.